Understanding business finance starts with knowing the basics, and you don't need to be a finance expert to get it. Business finance simply means managing money in a way that supports your business's operations and long-term growth. You must understand the difference between revenue and profit. Revenue is all the money coming in, while profit is what's left after expenses. Learn the 4 cornerstones: income, expenses, assets, and liabilities. These terms are used in every financial statement. A beginner must also grasp why cash flow is king. Many profitable businesses have failed due to poor cash flow. Also, get familiar with working capital, which is the money you use for day-to-day operations. Know what capital means in business, whether it's debt, equity, or retained earnings. Differentiate between debt and equity and understand the cost of borrowing. It means interest. Define financial goals for your business, short-term like paying bills, medium-term like growing sales, and long-term like expanding globally. And finally, always remember, business finance is not the same as personal finance. Keeping them separate is the first golden rule every beginner must follow. Let's talk about financial statements. To understand your business's financial health, you must know how to read its financial statements. Start with the profit and loss statement, which shows your income, expenses, and net profit over time. The balance sheet shows what you own, assets, what you owe, liabilities, and your business's net worth, equity, at a given point. Then there's the cash flow statement. This shows where the cash is going in and out, not just on paper, but in reality. Learn terms like gross income before expenses and net income after all expenses. The cost of goods sold, COGS, is another key metric. This is the direct cost of making your product or service. Know your operating profit, which excludes taxes and interest, and get familiar with depreciation and amortization. They reduce asset values over time and impact profit calculations. Know what retained earnings are, the profits kept in the business for reinvestment. Financial ratios like ROI, return on investment, ROE, return on equity, and current ratio are essential tools to measure performance. And don't skip financial forecasting. This helps you plan for growth or prepare for slow seasons ahead. Once you know how to read financial statements, it's time to manage your money actively. Learn how to create a business budget, list your income sources, and allocate expected costs accordingly. Always distinguish between fixed costs like rent and variable costs like materials. Every dollar counts. Track every single expense. Use tools like Excel, Google Sheets, or budgeting apps to simplify tracking. A common beginner mistake is mixing business and personal expenses. Avoid it by opening separate bank accounts. Know your break-even point when your revenue covers all your expenses. Keep a business emergency fund because unpredictable events can impact your cash flow. Update your budget monthly and review financials regularly. If you're not profitable yet, look for areas to cut unnecessary costs. Have clear monthly, quarterly, and yearly financial targets and stick to them. A great rule is if it doesn't make you money or save you money, cut it. Efficient cost management is the fastest way to improve profit margins and ensure your business survives the ups and downs of any economy. Let's talk about the money you need to start or grow a business, known as capital. You can self-fund, take a business loan, raise venture capital, or get angel investors. Before approaching any lender or investor, build a financial plan and cash flow forecast. Always calculate ROI, return on investment, before spending on marketing, hiring, or expansion. Learn how compound interest can work for or against you. Study the basics of equity financing, bootstrapping, and crowdfunding. Know how term loans differ from working capital loans, and understand the importance of a strong business credit profile. Avoid over-relying on debt. Too much can kill growth. Track all agreements with investors clearly. Learn the burn rate, how much cash you spend monthly, and runway, how many months you can survive at your current spending rate.
Whether you're planning to raise seed funding or expand globally, having a clear understanding of financial instruments will help you negotiate better, stay in control of your business, and grow without losing your peace of mind or your equity. Mastering business finance doesn't happen overnight, but it can be learned step by step. Start by using cloud-based accounting software like QuickBooks or Xero to simplify financial tracking. Take short finance courses online, YouTube, Udemy, Coursera. Let me share with you 10 of the most valuable business finance tools every business owner should consider using, no matter the size or industry. First up, QuickBooks, an all-in-one accounting software perfect for small businesses. It helps manage invoicing, expenses, payroll, and taxes while providing real-time financial reports. Second is Float, a visual cash flow forecasting tool that integrates with accounting platforms to help predict future cash positions and avoid liquidity issues. Third, we have Stripe, a global payment processing platform that enables businesses to accept credit card payments, manage recurring billing, and handle international transactions seamlessly.
Fourth is Expensify, an expense management tool that automates receipt scanning, mileage tracking, and employee reimbursements, perfect for companies with frequent travel or remote teams. At number 5 is Planful, a financial planning and analysis solution used by finance teams to collaborate on budgets, forecasts, and strategic planning. Sixth is Brex, a corporate credit card platform designed for startups, offering high spending limits and real-time expense visibility. Number 7, Carta helps startups manage equity, cap tables, and investor relations efficiently, a must-have for companies raising capital. At 8, FreshBooks offers time tracking and invoicing features that help freelancers and service providers manage billing with ease. Number 9 is Xero Projects, a project costing tool within Xero that allows businesses to track budgets, billable hours, and profitability per project. And finally, at number 10, Gusto handles global payroll, taxes, benefits, and HR compliance, making it ideal for distributed and remote teams. These tools together form a powerful tech stack that can elevate your business's financial operations and help you scale with confidence. Learn basic Excel functions and powerful tools for quick financial analysis. Develop a financially disciplined mindset. Review your numbers weekly, not just during tax season. Stay compliant with local tax laws. Understand the system, don't fear it. Talk to an accountant or a financial advisor when needed. Always remember your business's survival depends on financial health more than your idea or marketing. Keep a growth mindset. Improve your financial literacy consistently. Follow business finance channels, read books, and watch content like this. Lastly, believe in yourself. You don't need a finance degree to control your money. You just need the willingness to learn, track, and act. Because once you understand business finance, you don't just run a business. You build wealth. If you found this video helpful, don't forget to like, subscribe, and share it with fellow business owners or entrepreneurs. Thanks for watching, and until next time, keep your numbers strong and your business stronger.